This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, August 24th, 2015. Euro dollar. So the euro continues to surge with the market trading up to fresh multi-month highs, taking out critical resistance in the form of the 15th of May high at 114.67 and trading just shy of 115 thus far. At this point, the market is very overextended intraday, and there is risk for a bit of a pullback before or if we even see any resumption of gains. The market is now traded into some key medium-term resistance up here, and a daily close above 115 would be required to open the door for fresh upside and open the door and suggest a structural shift in the euro. But inability to close above 115 will keep the pressure on the downside on a medium-term basis and potentially set the stage for a bearish resumption of this underlying downtrend. At this point, though, we need to see a breakback below the low from Friday, which comes in at 112.30 to put the pressure back on the downside. But again, only a daily close above 115 would force a structural shift in this market. Sterling dollar. So cable has broken to recent highs, with the market trading up last week all the way up to 157.23 about ahead of the latest minor pullback. But setbacks have been very well supported, and there's risk for additional upside now towards the 2015 peak at 159.30. At this point, only back below 153.50 would compromise the constructive outlook for sterling dollar. Dollar yen. So dollar yen has been collapsing in recent trade, with the market trading all the way down below 121 and closing in on that key 7th of July low at 20.37. At this point, there is risk for deeper setbacks here. The broader structure on a medium-term basis remains constructive, also on a longer-term basis, but setbacks could still extend into the 119 to 118 area before we see any legitimate support and resumption of gains. At this point, we need to see a breakback above 123.50 to take the immediate pressure off the downside. Euro Swiss. Euro Swiss setbacks have been very well supported, and the market looks like it could be poised for a resumption of gains back towards that recent high at 109.62. A break above 109.62 would open that psychological barriers at 110 further up, and then towards the 112 area next. Any setbacks ultimately should be supported by previous resistance turn support at 106.90, while only a close back below 105.75 would compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie dollar is broken down to yet another multi-year low on Monday, with the market taking out key previous support at 72.15. The break does expose fresh downside towards psychological barriers at 70, though a daily close below 72.15 would be required to open the door for an acceleration, while inability to do so will suggest that the market could be poised for more consolidation and correction. Really, only back above 74.40 takes the immediate pressure off the downside. Dollar CAD. So dollar CAD has broken out to its fresh 11-year lows, taking out the previous high that we had seen in place around 132.15 and now trading up towards the 133 area. Rallies have now stalled out in Monday at 32.55, and we could see a bit of a pullback to allow for some stretch studies to unwind. But overall, the constructive outlook remains highly intact, with the market now focused on a move towards psychological barriers at 135 further up. Any setback should now be very well supported ahead of 128.60. Kiwi dollar. So Kiwi has been consolidating over the past several sessions, with the market locked within a bearish consolidation and the downtrend firmly intact. A break below 64.70 would open the door for fresh downside towards psychological barriers at 60, while only a break back above 67.40 would take the immediate pressure off the downside and open the door for additional corrective activity towards 70. SPX 500. So the S&P 500 has been absolutely collapsing over the past several sessions, and the market is now trading down towards next key psychological barriers at 1900. The setbacks now have reached a measured move objective at 1940 after the market had been trading for several months between the 2040 and 2137 record high, about 100 points. We collapsed to exceed that measured move objective of 100 points to the downside, which came in at 1940, trading just shy of 1900 thus far. At this point, though, studies are looking very stretched intraday and also on a daily basis, and we could soon see a bit of a bounce before we see any resumption of declines. Gold. So gold is now looking more constructive after the market based out below fresh multi-year lows below 1100, and the market is now traded back above that previous 2015 base at 1142. This suggests we could see further upside over the coming sessions towards next medium-term resistance in the form of that 1233 high that we saw back on the 18th of May. At this point, only a close below 1100 would compromise the bullish outlook.